All right, Soybeans Swing is short soybeans today. This is a live trade. The market has already closed for the day. It closes at 1:20 Eastern Time, actually 1:20 Central Time, 2:20 Eastern Time. And you see it's closed, so it's not moving right here, but we are short on this trade from 962 and a half. And I'm going to show you this is the actual trade from the matrix. I'm going to show you the actual strategy window. Here is the actual strategy window. It had another trade back here, but we're looking at this one right now. The signal, you can see two arrows. One's the bubble and one is the regular arrow. The strategy 962.5 got filled at 962.5. No slippage on the entry, and that is the strategy window for Soybean Swing. Now I'm going to show you the research platform. This is my VPS I have online for automation, and I'm going to show you the offline version. Now here's my other computer. I'm logged in with delayed quotes. I pay pro fees, so I use delayed quotes on these. So S parentheses D means it's delayed. The other one did not have a parentheses D behind it. It's real-time quotes. You have to have real-time quotes for automation, but if you if you're especially if you're a pro and you pay $105 per exchange, total exchange fees can be around $1,000 a month for a pro if you have multiple platforms. And so I use delayed quotes when I can. I don't need to have real-time quotes on my research platform. So I have the delayed quotes on this research platform. And here are the results going back to 8/1/2006. That's when the soybean started trading on the electronic markets during the day sessions on 8/1/2006. And you see the results. And if you look at the website, I haven't updated it in over a year, and so these are the results from September through September 30th, 2016, and you see 290 trades, $2,900 drawdown, and you see it's up about 6,000 more than it is on my website because I haven't updated the report yet. The drawdown is still the same. Here is the equity curve, and we take a look at the trades in 2017, 6,037.50 on 42 trades. So about $150 per trade on average. The ranges have been narrow. There haven't been many big winners. You know, they're usually in the $200 to $400 range on the winning side instead of $500 to $1,000 winners. But you see, this is the conservative version. 2008 was a big year on 22 trades. This is a conservative version. Let's take a look at the aggressive version. I'm going to go back to my website and show this to you. If you go to my website, you can find this for each platform under Grains Swing. NinjaTrader 7. I've just updated on NinjaTrader 7. You can see that there. You can see the results on NinjaTrader 7. This is the conservative version. It takes less trades, has a bigger average trade profit, and then the aggressive version takes more trades, has a greater total net profit, but a smaller average trade profit of $140 versus $212. And so you can see more information there on NinjaTrader 7. You can see it on NinjaTrader, let's see, Grain Swing NinjaTrader 8. You can see it there. This is updated as well. I'm going to update the TradeStation report. Slightly different results between platforms, but very close. And so you see the conservative and the aggressive version there as well. And on TradeStation, I have pit data back to 1984. So this is what you want to look at. There's a report that needs to be updated. These two reports need to be updated. The conservative. This is the conservative version back to 8/1/2006, and this is the conservative version as well. And it's from 1984 to 7/31/2006, right before the pit market mainly goes electronic in August 1st, 2006. And so we're looking at the pit trades from 1984 to 2006. We've had this strategy for a while, and average trade profit is a little small, $80.21, but it's consistent. The equity curve is up and the drawdown is low. And you also have the different exits. This one is hold overnight, hold over the weekend, no profit target. This one is the hold overnight, hold over the weekend with a $400 profit target. So if you want to have profit targets, you get smaller average trade profits, straighter line equity curves typically when you have tight profit targets. And this is the pit session, hold overnight, hold over weekend, $400 profit target. And you get less drawdown on the pit session going back to 1984. The drawdown is smaller, 4,800 versus 3,012. And then here is the more aggressive version since 8/1/2006 through September 30th, 2016. And you see the drawdown is bigger. Obviously 77, 37.50, 895 trades. Average trade profit is 143. And here it is on the pit market from 1984, August of 1984 through July 31st, 2006. You see 74.24 average trade profit, $6,100, and drawdown. It kind of goes sideways here at the end of this period. And so those are all the stats, and I have it in multi-charts as well. If you want to take a look, grain swing in multi-charts, you can take a look at, this is updated through May of 2017. It's hard to keep everything updated to the latest. Very time consuming, but you can see slightly different performance. I love how the drawdown curve shows up in the multi-charts performance summaries. And then you have a different tab, total trade analysis, to see the average trade profit. You see $191 here. We're using TradeStation data, and so you see this is a slightly different time frame, 5/19/2017. It's 54,275 average trade profit. And so let's take a look here. Here, that was the conservative. Here is the aggressive. So you see the aggressive version here in multi-charts, and you can see the average trade profit down here, 131.59, and the custom session, data settings, input settings. And so that's a comprehensive video on Soybean Swing. It's proprietary, so the rules are not known to the user, but it's been one of our top performers. It's about $5,000 per contract this year on the conservative version, and that's with slippage and commission. About $6,000 without slippage and commission. Pretty good profit for one contract in soybeans for a year in these narrow ranges. So that is the update for Soybean Swing.